Well, welcome to the weekend, everybody. It's another one of those weekend videos. Um, we'll get straight into it now. I'm starting on Eurodollar and I'll work our way through. Here's the 4-hour chart. Last week, I think I spoke about the possibility that this wave 4 green is actually wave 4 brown. I'm not against that view at all at the moment. I'm sticking with the current wave count still because it hasn't been invalidated. But for now, just be aware that this larger wave 1 here may extend even further down. So that could happen in a case where this wave 1. Let's rewind there a second. That could happen in a case where this wave 3 green here is extending even further. So we could be talking about wave 1 down, 2 up, wave 3 to that recent low, wave 4, or an ongoing fourth wave in brown there, and wave 5 down. That actually does sit quite well in terms of, let's say, the look of a third wave, with a nice long extension there in wave 3 of 3, and that's what you would expect. You have your peaks in momentum there as well, also around the end, center to the end of that wave. So I'm not. That's the alternate count, and I'm not against that. It does suggest that we might get a kind of a fourth wave correction here, which could be a contracting triangle or something along those lines, which I don't think we've had for a good while now in Eurodollar. So we should probably expect that. So if the price action from here on in over the next few weeks, if the price action turns corrective and sideways, then I'll probably switch to the alternate count, which would view this recent low here as the low of wave 3, and then we'd get an ongoing wave 4, possible triangle or something, and then a final decline in wave 5 green here. This is all speculation at the moment, but it's something which is kind of coming to light given the pattern that is unfolding kind of before our eyes here in this wave 3 down. Okay, so let's get to the short-term chart in Eurodollar. Either way, that's the alternate count there, showing that wave 4 at one lower degree. Either way, we're still working on a fourth and a fifth wave, so the internal wave structure is still the same. Today we had a kind of a further decline in a possible expanded wave B. So this wave 2, the second wave here, is probably an expanded flat correction, with the wave C may have begun off today's low. So we have a nice three-wave pattern within a declining trend channel there. So you'd be expecting like 3 waves up in A, 3 waves down in B, and then 5-wave rally in wave C there, which should kick off Monday. We're not talking about much either, so we're talking about 70 or 80 points. The close is at, I don't have the price there, 117.68, 117.70. So we're expecting about 1850, so 118.50. So we're talking about 80 points of a rally, possibly in wave C. If that happens, then we'd have an expanded flat correction, wave 2 complete, and we would expect a further decline then in wave 3. So for Monday, we'd watch for a little pop up to the 118.50 area, and that's the 38.2% retracement then of wave 1. So you've got a Fibonacci level there, you've got a previous fourth wave, so and it would break the previous wave A high. So that would these kind of points kind of concur to give us that target. So for Monday, watch for a pop into the 118.50 area. Okay, let's go to pound dollar. Here's the 4-hour chart in pound dollar. Again, the same situation may be occurring in pound dollar. We've got this horrible pattern here in an obvious correction, but the internal labeling here is just, or the let's say tracking that wave is just horrendous, because everything fits and nothing fits, and I'll dive into that in a few minutes. Suffice to say that we are all but, well, we're most definitely down into a downtrend now. At what degree is still yet to be decided, but we have some key levels below us arising pretty quickly. So we're about 170 points above this key support here at 133. So that's the previous wave 2 here. You would expect that a break of that, given the current pattern, you would expect a break of that early next week, possibly Monday. If that happens, I would be fairly certain that the larger long-term count is moving down into wave 5 blue here. I know we've got a large move off the high there, but you still want to see a break of previous support levels to kind of, let's say, pull the rug out from under the market and turn it in the direction that you're looking. Okay, so let's get down to the hourly chart. Okay, so we have an ongoing 5-wave pattern to the downside in brown here. 1, 2, an extension in wave 3, possibly at that low there on the 4th of May, I think that was. And then this real strange triple combination, wave 4, and a possible decline into wave 5 now. Again, it's quite hard to read this, because for all intents and purposes, you would tend to look at this whole sideways move and regard it as one movement or one wave. So until we get like accelerations to the downside, which we may be seeing now, but until we see breaks of previous lows, then and clear breaks, I mean, by 100 points or so. At that point, then you can say, yes, okay, the previous correction is complete, and we're moving down into a further impulse wave to the downside, or sorry, a further motive wave to the downside. So far, I think we may have 1 and 2 complete. That counts as a 5-wave, 5 and 3 pattern, and then since then we've had stunted moves to the downside, which doesn't inspire a whole lot of confidence, but we may be moving into wave 3 pink to the downside here. So on Monday, you would expect, if this pattern here is correct, then you'd expect 1, 2, and wave 3. Let's get this one down here. A wave 3 gray. So that'd be a third of a third wave. So you would expect to see an acceleration on Monday to the downside. If we don't see that, well, then we're either working on a larger wave 2 in pink, or we're working on a larger wave 2 in gray. I'm afraid that this is just what we're left with when dealing with the future. We just cannot, can never call anything for certain. You just deal with the balance of probabilities, really. So I'm looking at continuation of a decline on Monday. That's where my chips are at the moment. Definitely, if we get a break of that previous wave 1 low there, so that would be 134.50. You're talking about confirming a decline in wave 3. So that's what you look out for on Monday. Okay, so dollar yen, 4-hour chart in dollar yen. I think we're drawing to the close here of this initial move up in dollar yen. We've got, unless we get further extensions to the upside, which is again possible. I mean, the way we would know if that was happening is if over the next few sessions we see a 3-wave pattern with again a spike to the upside again. If we see a 3-wave decline followed by a 5-wave move up again, then we will know that this pattern here is actually extending further to the upside, which is not beyond the realms of possibility at all whatsoever. For now, we're most definitely on the run up. Nice impulsive moves, nice motive waves clearing in 5-wave patterns to the upside. We have interim targets, our interim previous highs at 114, high 114s, and then beyond that we're up at 120s. So they're excuse me, they're longer term targets. So for now, I'm kind of leaning towards the idea that we may be seeing a close of a possible wave 1 in grey here, and maybe a move down into wave 2. If we were to get that, well, then you would be targeting these previous interim lows, which would be previous lows of 4th waves or within 4th waves. So 108.60, 108.50 area. There's kind of a shelf of support here below that there at that's at 107.50. So you'd be talking about between 108.50 and 107.50 for a second wave. That would be wave 2 grey. Let's get that into the chart while we're talking, while I'm talking anyway. Okay. Yeah, you'd be talking about, that seems like a reasonable target for to kind of split that third wave there, where that vertical move there, where the price would come back down in to find support in around where that that vertical move is. So you kind of split the distance in a way. Okay, so that's kind of talking out into the future now. Let's see how the short-term wave is actually developing. So I'm looking at this decline here today. We had an initial move down, and then let's get to the 30-minute chart here. Expand that out a bit. We had an initial move down, then a pop to the upside, and then I think a pretty clear 5-wave move down. So that could be a C wave. So we could be talking an A, B, C pattern there, with the wave 3 high at the overnight high, which was the Japanese session. So the overnight high there was at 111.03, so just above 111. So we may have had an expanded flat off that, which would clear wave 4. And so far the price has remained above the previous wave 1 high, which is 110.45. So we're kind of in tight territory there with the price where it is closing out right now. So it's 110.74 is the aftermarket. So 110.74 with a high at 110.45. So you're, that's what that 29 points. There's not a whole lot in the margin there. If we see a break of that high labeled wave 1 there on Monday, which is very possible, or in the overnight on Sunday night, well then we could pretty much count the larger pattern as complete. Well, you could start to lean towards that anyway. We would probably call wave 5 complete. And definitely if we see a break of support on Monday, so 110, if we get a break below 110, yeah, I think we could pretty much count that as a done deal then, and we'd start to look down in a possible wave 2 correction. So for Monday, we're pretty much at the end of this large move up, as you were seeing on the 4-hour chart there. This large move up in wave 1. So for next week, we're looking at a turn into a possible wave 2. When that happens, we'll look at it every day and we'll see. Excuse my voice now. I'm kind of I'm teetering on the edge of a of a cold here. Okay, so far so good for the Dow. We've had initial declines off the trend channel there, so we have a 3-wave rally in a possible wave 2 complete, and with initial possibly impulsive declines off that recent high. So at the moment we could still be looking at 3 degrees of impulse waves to the downside complete. Let's get down to the implications for which are an acceleration of a turn into a possible third wave down. So you would expect an acceleration into downside over the next couple of weeks. So in the short-term pattern, we're still kind of playing around with the idea that this is a second wave correction. It wouldn't inspire a whole lot of confidence, the move off today's or yesterday's high, was it? Yes, yesterday's high. The market is pretty flat. The move down has been muted. So unless we're seeing even smaller degree impulse waves happening here, which is possible again, internal waves within a possible third wave within a larger degree wave 1. So what I'm counting is 5 waves down. Excuse me, 5 waves down in wave 1. So unless we're seeing an extension lower in a third wave beginning in a couple of 1-2 waves, well then that's most definitely on the cards. The first point or level of significance is 24,630, and that's the previous wave 1 low. And then I have this level here at 24,495, and that again is kind of it's pretty much a pivot point, because we've got interim highs there, previous interim highs, and 1, 2, 3 definite points of kind of inflection. So I like that. I like the idea of a break of that kind of shoulder point there, that shoulder level. If you're talking about head and shoulders patterns, so this would be an internal shoulder here. That would also be a shoulder, right hand shoulder, and this again, this B wave here would be another shoulder. So if we saw a kind of, and then if you're going back even further into March, you have these 2 previous A waves here. So they're in around the same 24,450, I think it was the high there. So what I'm trying to kind of build here is, again, another impulse wave to the downside, and a right-hand shoulder, and confirmation of a move down into a third wave. I'm afraid at the moment it's still just kind of a wait and see. You could risk it and start picking up some or building some short positions with really tight stops. Is there much of a point to that? For me, as a kind of a trend trader, I'm no more am I attracted to that sort of strategy. I would have been a few years ago, but not anymore. I like to be sure with my money these days. So in general, next week, I do want to see a third wave down early next week, very early next week, and definitely key resistance has to stay intact. So that's 24,994. So let's look for that on Monday. Let's look for a break of 24,630 and see if we can build a larger 5-wave pattern and a larger impulse wave off that previous wave 2 there. Okay, so let's get down into 4-hour chart in gold. This is my, well, actually, 3 favorite markets at the moment. So 3 markets at pretty critical kind of inflection points within their patterns. Gold is one of the most exciting well, they're all quite exciting, but for me, being a gold bug, gold is quite exciting for me. I think we have completed this corrective pattern in wave 2. And I think the fact that the market seems to be utterly against gold now, and the media seems to have taken flight and jumped into the bearish side of camp completely. Dire predictions anywhere from we'll see 1,000 or break of 1,200, or what was that CNBC 7% decline on the cards immediately, and predictions of declines back into the lows again of $1,000. Yeah, I'm firmly in the opposite side of that camp right now. I think I was pretty much born a contrarian, and it's in my blood. And when I see things like that, I just jump to the opposite side of the ship completely. Yeah, I think we've got a clear 5-wave pattern complete in a C wave within this larger wave two here. So let's get down into the short-term chart. And there's that 5 waves down in wave 2, and I think the last couple of weeks I was counting this as a 4th wave, and as it completed, it was getting more definite that it was a correction in 4th wave. And then this week we got that nice sharp decline in to complete a 5th wave, which exceeded all my expectations, or met all my expectations really, because I wanted to see one final run down into this lower trend channel line there. We've pretty much got that. And I wanted to see a break of the previous low there at 1302, and we got that kind of emphatically. From here on in, I am fully switched to a bullish mode, and I'm looking up. I'm looking a long, long way up. I think there could be a bull market opportunity in place right now, and in my kind of less skeptical moments, I am willing to say that I think gold will go to at least a new all-time high, and we may even be looking at $3,000, $4,000, $5,000 gold before this next bull market phase is over. And it might take us 2 or 3 years, but I think the pattern is in place, and I think it may well do it. Okay, so enough of pie in the sky long-term predictions. Let's get to Monday and Tuesday and Wednesday, so early next week. I think we are seeing a base building here. On the 4-hour chart, we've got a nice divergence to the upside already in place. We've got serious oversold in both 4 and 1-hour charts, and on the daily chart, I suppose it's way too early to tell on that. But for me, the 4-hour chart in the kind of medium term, from taking the medium term view, is definitely very useful, and that's showing bullish divergence. Also, the pattern 5 waves down in wave C is complete, or all but complete. And early next week we should be seeing the initial rally in a possible wave 1 up. So again, in order to be the most sure of a turn, we would like to see a 5-wave rally followed by a 3-wave decline in a second wave. So at that point, you would be looking like, you would have a bullish Elliott wave signal in place. You'd have an impulse wave in place, and you'd be talking about, getting your wallets out and starting to accumulate. So from here on in, next week, we're looking for our first impulse move to the upside, and we'll track that as it happens. Okay, so the final market is crude. Again, crude is at a pretty serious inflection point within the pattern. I think we have 5 waves up of a C wave complete within a larger degree 4th wave. And let's get to the daily chart. So here's our 4th wave off that $26 low, $27 low, whatever it was. wave A, a triangle wave B, and wave C to be pretty much commensurate with wave A right now. We have 5 waves up out of the wave B low, which was last September. 5 waves complete, and we have a completely euphoric market on top of that. And let's get down into the lower term chart. We have I think a 5-wave pattern complete in wave 5, and this would be an ending diagonal. Wave 1 here is, I will admit, wave 1 is less than ideal, because an ending diagonal should, in theory, an ending diagonal should trace out 3 waves within each subwave. We've pretty much got that in obviously wave 4, so we have 3 waves in wave 4, and I think we've pretty much got 3 waves in wave 5 there. So the ending diagonal, unless you can count this stunted move off the low here as a possible 3 waves, which you probably could actually. You could call that an A, B, C move up. So it could be a flat with a 5-wave wave C. So you could be talking about 3 waves up there. Definite 3-wave move down there in wave 2. Again, the bars are so close together. It's really hard to count that. You'd have to split it down into the 10-minute chart, and I'm not willing to do that right now. And needless to say, I do think the wedge pattern is still there. I think we're pretty much at an overbought extreme, and we've got the bearish divergences. We've got the bearish divergence in place on MACD since the momentum high there in wave 3, which again picks out wave 3 for you. So we've got this nice declining momentum, and we've got the divergence to the downside. We've got the ending, say the wedge pattern in the wave 5. All we need now is for, again, an impulse pattern to appear to the downside. And we'll be on the lookout for that. It's much like stocks, really. We're just on the lookout for an impulse move to the downside to kind of give us a clear incentive to view the top as in, and to kind of shift focus to the downside. So that will be the focus for me next week anyway in crude, is to see a clear 5 waves down and followed by a corrective 3-wave rally. Okay, I think that closes out. Before I start slurring my words and making no sense whatsoever, I think we'll close out the video and we'll close out the week. And I want to say thanks to you all. Wish you all a great weekend. Godspeed to everyone, and hope to see you back healthy and happy on Monday evening. Until then, bye-bye.